Hello, welcome ladies and gentlemen to Nirmal Bhagani Ladadia. We have with us Kunal Shah, Head Commodities Research, joining in. Kunal, a very good evening. Firstly, my question coming to you is, as anticipated, we are seeing these seesaw rides coming in with regards to where crude prices are concerned. Today's session as well, we did see a marginal uptick coming in, at least in terms of where Asian hours go. However, the fears with regards to where the second wave of coronavirus are concerned, as well as if you see in terms of the geopolitical tensions that we are looking at, how do you see, the movement from here on?
Yeah, so I explained in last two webinars that this market rally is nothing to do with just fundamentals. The massive amount of money is being pumped in the system. So even if you look at the Indian equity markets today or the global equity markets, Nasdaq, Dow Jones, the more and more negative news we are getting on the economic front, and at the same time, the markets are making new highs and markets are continuously moving up. So there is a disconnect between the market and the real economy. But generally, markets are always ahead of the real economy. So, like we are seeing the new round of coronavirus outbreak in China, in Beijing, in US, Texas, California, LA. So a lot of these places, Florida. So we are seeing the fresh outbreak over there. But then too, markets are moving up. Why? Because I think that even if there is another outbreak, it seems that there is not going to be a lockdown. So lockdown part 2 will not come in US or in many parts of the world, because the cost of lockdown is very, very, very high. The economic cost is very high. So you may not see the lockdown even if the cases are shooting up. And on the vaccine front, WHO has been saying that by the end of the year they should get the vaccine. So that is slightly positive. But what is basically happening amidst all this fear and chaos is that a lot of people, who are getting infected with the coronavirus, they are basically getting discharged in a week, or they are taking self quarantine in India, in Mumbai especially, and they are getting cured in a matter of 7 days, 10 days, without getting admitted in hospital also. So I think the people have started to live with this, and slowly and gradually things are opening up, and they are likely to open up further. So markets are moving ahead of in advance of everything, and rallying right now. Now coming to your main question, crude oil. Crude oil also, forget about the fundamentals for the time being. The production cut of OPEC is going to continue till 31st of July. So we are going to see another, 40, 50 days, 40 days where the production cut is likely to remain intact. So demand is also coming back, because a lot of economies are opening up. So I think the surplus of crude oil, which was 8 million barrels, right now stands at 4.5 to 5 million barrels, which is significantly lower than what we saw in the month of April, which was 25 million barrels per day. So I think with the risk on sentiment, even oil prices are likely to remain firm. 3,000 good levels to go long. 3,120 to 3,140 are levels what one can expect on MCX. So this is nothing to do with fundamentals. The moment production cuts are no longer in effect, and they are producing more, at that time prices will automatically will come down. But till then, there is a risk on sentiment, and hence the prices of oil likely to remain firm. Stop loss should be placed for this strategy around 29.60. So I'm little optimistic on the outlook of crude oil.
Right. And with this, Kunal, I was reading an article which was indicating that Saudi Aramco is said to have cut the crude oil shipments loading in the month of July to at least five of its customers in Asia. And with regards to this, they're significantly cutting their oil exports to the United States as well. So with shipments likely to hit almost a 35-year low, if you could just put this into context for us.
Saudi Arabia's anyways export to US has been on the decline from last many years. So the moment in fact US was on the verge of exporting oil in a very big way to the Asian market. So the reliance of US on Saudi Arabia is very less right now. I don't think so. This can have any significant impact on the prices of oil. And I think what remains to be seen is that we've seen 1.5 million barrels of drop in oil production from US. So now with the surge in price, whether that production is coming back or not, that is something, what is important to see here, because the contract which we are trading is WTI contract, which is reflecting US demand and supply. So I don't think so Saudi Arabia's news will have impact on our contract.
Right. And I mean, any impact you see with regards to what's happening with China as well? Because the oil demand in China is also rebounding. In fact, they imported a record high of almost 11.3 million barrels last month. What would this actually mean?
Yeah. So what is basically happening in China is the China are not coming up with direct stimulus package, but they
Hmm.
are coming up with a lot of measures to the businessmen, and they are in fact indirectly infusing the liquidity in the financial system. The
Okay.
manufacturing PMI doing very well. The retail sales also picking up gradually after a sharp collapse in the month of February. So I think that China is doing well as compared to the world. So if you ask me, Kunal, which is the economy which is doing better right now, it is definitely China, without any thoughts in my mind. So China's oil demand, roughly stands between 9 to 10 million barrels per day. And if China is doing well, then I think the loss of oil demand from China is definitely coming back. Right now, there is a problem in Beijing itself. The problem is not extended to other provinces. So only Beijing is facing a new wave of coronavirus right now, and China has been, the government has been very proactive in containing it. So still nothing to worry. The things are still under control.
Okay. And overall, if you have to move to, gold and silver, do you think right now, taking the current situation into consideration, there is a possibility that silver will be relatively more resilient than gold from here on, with regards to the rally that could be expected towards the year end?
So basically, I tell this to everyone. I've explained this to in all my webinars, that basically love demand and fear demand. So wherever jewelry demand is there, then that is called a love demand, and the fear demand is basically crisis happening or things getting worse and people buying gold. So now with the rise in stock markets, now with the improving sentiments across the globe, as far as the lockdown is over, my view is the upside in gold in immediate term is going to be limited. And I generally don't believe in giving diplomatic views. So even if I go wrong, I will pull out my neck and say gold is sell right now for the
Okay.
short term point of view. This is not a long term positional call, or but for the short term point of view, one should go. So I was talking to a lot of our regional guys today, and I came to know, majority of the clients are, stuck in long position. So I strictly advise them to square off the long positions, and if possible, they can, start going short in gold for trading, and you can expect gold to decline by, 1,000 rupees, or in a day or two, 400-500 rupees, because it's now I am not coming across a single report indicating gold will go down. So ETFs are buying gold every day. Everyone, if you ask anyone what is the outlook of gold, so what happened, when S&P and Dow Jones were at all-time high, and there was no bearish trend at that point, and no one was talking about bearish market scenario, and markets collapsed after COVID crisis. Similar thing is happening in gold, but gold cannot crash. Gold is going to correct only because the fundamental of gold are definitely bullish. So strict stop loss, put 47,650 to 700. Go short in gold, and I'm expecting 47,000, 46,800 today, tomorrow. I'm not expecting any upside from here. So I'll recommend to go short to our clients.
Right. And with this, how are you looking at silver from here on? Because apparently everyone's talking about that the sentiment with regards to where silver is concerned, that has been improving here on. In fact, the ETF holdings are also up almost around 25% YTD if you have to look at only the silver side of it. And now it seems that silver is yet to play the catch-up rally that we've already seen after, its, underperformance that we saw in the first quarter. Do you think on the back of the industrial demand as economies reopen, there is a possibility that silver could enjoy its rebound?
Yeah, so for silver, with the industrial metals remaining strong, I'm not bearish. But when gold prices goes down, silver tends to catch up with the gold and it can edge that lower. But I'm very bullish on the outlook of silver. But in 1 or 2 days perspective, you can see a 300, 400 rupees correction in silver, which shall be used as a good buying opportunity because the industrial metal is doing really well. So I don't think so that silver will collapse or crash right now. I see outperform gold and silver. Silver's outperformance will continue right now, and silver will edge higher. So 300, 400 rupees downside from here, and you can start accumulating silver. That is my view for silver. Looks better.
Right, and what's the sense that you're getting on with regards to where base metals go? Because today's session, if you go to see, it's been a pretty mixed trend, especially if you have to look at, say, aluminium, copper, zinc, or even lead. So, what would your recommendation be with regards to base metals?
Yeah, so my recommendation is to go long. Okay, I explained that even last to last Monday, we recommended to go short and told that 34, 35 maximum downside we can see because there is so much liquidity, you are not going to see fall in. So even though this new wave of coronavirus started in Beijing, then too copper prices recovered. So now you have to understand that irrespective of what is happening, the fundamental view right now is strong because the pent up demand. So what is pent up demand? So for 3 months there was a lockdown in the economy, and now economies are opening up. So if I'm into infrastructure or I'm into real estate, so I would start buying raw material. I would start buying steel. I would start buying copper. I would start buying cement. So now the pent up demand of all the base metals is coming up. So you will say that copper was 3 months down the line it was trading at 350. Right now it is 445. It's already up by 95 rupees. Should I go long in this? My answer is yes. You should not do that match that it is already up by 95 rupees, so I should not buy. Even if it is up, it can still go up because right now the economies are opening up and the demand is coming back. So copper can go up, I would say 454 to 455 very likely. Zinc can go up 165 to 166 very likely. Lead can go up to 147, 148 in a matter of next 2 to 3 days. So all bullish calls I have for the evening session, and I think metals looks safe haven for going long. In today's evening session, Friday, you may see some profit taking, but the trend is definitely on the upside. Don't worry if it goes down by 4-5 rupees. Stop loss for copper, one should keep around 442, 443. One can keep a stop loss and go long and expect prices to really move up.
Right. And what's the sense right now in terms of agri commodities? Because that's going to be the flavor of the season, at least right now. However, this week, if you go to see, we've not seen a very strong momentum that could have been expected. Any picks on that front?
I'm bearish on soybean. One commodity, August contract soybean, one can see levels of 3,600 to 3,500. India's crop of soybean, the sowing will be much better than expected. And with a lot of the labor back to the villages, I think the agriculture production this year will really be on the upside. So the crops right now, which are going to be sown, maybe guar seed, soybean, I don't expect any major upside in them. And I see the probability of it going down is very high.
Okay. All right. In fact, if we have any questions, yeah, your view on the rupee dollar pair as well. In fact, that's something, Kunal, everyone wants to know with what's happening with the rupee. Because if you see in terms of this week's movement as well, we've seen a strong weekly gain in the month. In fact, this week.
So where I keep getting calls in our group also on like Anup is asking, what is the view on USD INR? It is basically stuck in a very tight range, and I will still be very open to tell what is going to happen as per me. It is stuck between 76.10 and on the upside 76.45. So maximum, 76.40 to 45 upside we can see. But the way the dollar index has weakened broadly from last 2 days, it has strengthened, but broadly it has weakened. It seems that rupee may not able to breach 76.45, and it will again go down to first 76 and breaching 76, 75, 80. So maximum upside I see till 76.45. I don't see the fundamental of rupee definitely very bad, but I don't see it breaching, because I'm not expecting dollar index again to go back to 100. So if that is the case, then rupee can really go up to levels of 78. But if dollar index is not going up significantly, rupee should not, and I think rupee will maximum right now, as of this moment, it is trading at 76.26. So I am saying maximum 20 paisa upside from here, Anup, and that is the time you go short in Indian rupee.
Right. So that's the view coming in with regards to where USD INR pair is concerned. I don't think so there are any other questions coming in. I think we've covered all of it so far. So thank you, Kunal, for joining in, and wish everyone a happy weekend as well. Thank you all for joining.